The new year is around the corner, which means there's just a few days left to sew up 2016's financial details for things such as 401k contributions, house savings accounts, and charitable donations. Channel 5's Alex Schreck spoke with some folks making donations today and a CPA who said donations can actually lead to reducing your tax burden. Alex.
In a best case scenario, they absolutely can. Now, Goodwill says this is one of their busiest times of the year. Last minute donations are piling in. Now that can add up to a last minute boost to some people's bottom lines. Unwanted clutter turned to gold.
Cleaned out clothes closet, so clothes and shoes.
Getting rid of old stuff that we no longer use.
Goodwill says December is always busy, especially the last week when charitable donations pour in. People who itemize their deductions know the clock is ticking.
And you are getting that last minute tax donation, but it's really more about making sure your old things that you loved go to repurposed and maybe a good cause.
So this is kind of how it works. You pull up in the donation station in a car or truck, unload all of your stuff, bring it on in here where they sort it out, and they give you one of these, a little ticket that itemizes the things you've donated, and then in turn you get to itemize it on your taxes.
How do you stay out of hot water? How do you stay out of trouble with the IRS when you're donating stuff?
Well, the first thing is keep the receipts. I think it's rule number one. And second, if is signature. You have the receipt plus the correct signature. It's one of the items that can help you if your tax return get audited.
The McAllen CPA also said if you do make a lot of charitable donations and itemize, there can be some real complexity that is often best navigated by a pro.
So our job is to make sure that the numbers are correct, that all the forms tied to the tax return, and also to file as early as possible.
And remember, if you ever do get audited, you're going to need written proof to quantify why those old tennies were worth $250. Alex Schreck, Channel 5 News at 6.
And a few other tax items to consider as 2016 draws to a close. You can control your income tax bracket somewhat by maximizing how much you contribute to your retirement accounts. More towards retirement could drop you down a tax bracket. The IRS provides a catch-up allowance for tax-deferred retirement accounts for people over 50. You can kick in an extra $6,000 a year once you hit the mid-century mark. And of course, getting last-minute charitable donations wrapped up before December 31st. That's only 4 days away. For more on year-end finance tips, please go to krgv.com where we'll have some links, that is, along with this story. Alex.